I'll just highlight that I will be making forward-looking statements during this presentation. I'd like to start off with this slide because it really does give a good snapshot, both in terms of the components that add up to our value stack within the company. And let's spend a bit of time speaking to the strategy there. So starting at the top, very straightforward, we have a cash balance, $210 million as of December. And really this cash has come from operations. We haven't done a financing since 2010. We have no debt. And really the aim and the purpose for this cash is to build some funds that we can use to deploy on growth strategies. And we've got a very active M&A practice looking at projects around the world, and ideally looking to replicate the kind of success that we've had with our operations in China. The next item in the stack is this share portfolio. So we have investments in other mining equities. As of December, which wasn't necessarily the best market in terms of pricing, that was worth $122 million. The largest of this is our 28% stake in New Pacific, which is currently worth $109 million, and where we've made about a 3 times our return on our investment. Strategy here is targeting assets through investments in what we call incubation, really to provide another avenue for growth for the company. So if you take those 2 items and you look at our current market cap of $521 million and you back those out, that means that when we get to the bottom stack, the foundation of the company, our mining assets, really the market's paying $189 million on an implied basis for these assets. And that compares to a consensus NAV of just under $600 million, so clearly at a discount. And our strategy here, as has been the case, is consistently profitable and targeting growth going forwards. We made just under $100 million in terms of operating cash flow in the last trailing 12 months. And our cost of production to produce an ounce of silver in the December quarter was $9.28 US after byproduct credits. We've got a program here to optimize these mines and also expand. We're looking to build another milling facility. And we're targeting to bring this silver production from 6.6, which is what we're expecting in this fiscal year, which will end this month, up to 8 million ounces in fiscal 2026. And of course, we wouldn't be able to do this and look forward to this bright future if we didn't have a strong relationship and a track record of ESG with both the government and the communities that we operate. So where are we? So we are operating 2 mining districts in China. We have our Ying mining district in Henan province. That's in fact 7 mines that feed into 2 centralized milling facilities. And we have the GC mine down in Guangdong province. We have a 3rd mine, which is on care and maintenance, and we're awaiting a mining permit that we would reopen this, or it could be open as a gold operation. But looking at our production history since we began operations in 2006, 87 million ounces of silver, over 1 billion pounds of lead zinc. Ying alone has distributed profits of over $500 million to shareholders. And with our resource and reserve base on reserves, we've got a mine life in excess of 15 years. So there's some advantages to operating in China. First off, we're close to our customers. So these are the smelters that all mining companies are delivering their concentrates to. And we're obviously right in the district with many of them. And in fact, they will come and pick up our concentrates from mines, which obviously doesn't happen if you're a Peruvian or a Mexican miner. We're close to suppliers, so as it relates to supplies and services that every mine needs, we get access to those very quickly and on a very cost-effective basis. We've got a capable and disciplined workforce. The mining regulation's been stable, and we're free to sell our metals output to whoever we want, and also to distribute our profits back to head office. And that last statistic in terms of foreign direct investment, surging to $189 billion in 2022, just shows that we're not the only foreign company investing in China. So it's the quality of our mines that really makes the difference. And looking at the bottom chart, you can see our all-in sustaining cost has tracked lower and more stable than all of our peers in the silver mining space. And I mentioned $9.28 an ounce in the last quarter. That has been a big contributor to our industry-leading EBITDA margin, which was 41% in the most recent quarter, and has contributed obviously to our return on equity of 8.5, which is again leading our peer group. And that return on equity is in fact sort of biased downwards, because if you go back to that first slide, the cash in the investment portfolio really doesn't make a contribution to that calculation, but clearly it's value within the company. The asset quality is what's delivered very consistent quarterly adjusted net income and free cash flow over the last 7 years. And I just highlight that the free cash flow, the seasonality you see in the calendar Q1 is because of Chinese New Year, where our operations are shut for a minimum of 2 weeks. Despite that, from a valuation standpoint, we're trading at the left end of the spectrum on both EV to ounce, EV to EBITDA, price to earnings, and price to cash flow basis, with some pretty wide discrepancies. And again, I'd highlight these numbers are not adjusted by those other figures on that first slide that I showed you. So I talked about Ying a bit. It's obviously the larger operation, and we have opportunities for growth here. And this is, I would say, is majority organic growth. We drilled 1 million meters in 3 calendar years. We have another 270,000 meters of drilling planned for this current fiscal year that we're going to start here in April. And we're targeting extensions of known mineralization, so the silver, lead, zinc that we've been mining, but also following up on some gold veins that we've discovered in some of the mines right in the footprint of our existing operations. We've embarked on a program of mine optimization. And so this is looking at different ways of mine planning, also adding some new elements like a XRT ore sorter at very nominal cost, also a paste backfill plant. And that's to help get ready for us building this third mill. And so we're right now focused on building the new tailings facility to ensure our operations into the future. But at the same time, we're embarking on a 3,000 ton per day mill expansion at Ying. From a satellite opportunity, Quanping was a target that we acquired a few years ago at a very nominal cost, 12 square kilometer land package, known mineralization, and we've got a mining license that we just received at the end of 2022. Got a few other administrative items in terms of some environmental and safety permits to resolve, just in terms of laying out our plans and getting them approved. And then we look to build a mining team and get into this ore body with the initial target to be shipping and trucking that ore to the Ying facility. So looking at our growth in silver production since very modest beginnings in fiscal 2007, just under 2 million ounces, targeting 6.6 for this year and then growing to 7.3 million ounces. And again, you can see the bulk of that is coming from the blue bar, which is the Ying mining district. Now, our reserves and resources have kept pace, and through that drilling program that I mentioned, we've been able to keep our reserves flat, even though we've had depletion for mining operations. Current inventory from the most recent reports is 115 million ounces in the proven and probable category, and that's included in the 210 of measured and indicated, but then there's a very healthy 126 million ounces in inferred on top of that. And based on what we see, we expect we'll be making further additions to the reserve and resource base. Now, coming up after this is a presentation by my colleague on New Pacific, but speaking to incubation of opportunities, why are we invested in New Pacific Metals? Well, it's because they've got 3 great opportunities in Bolivia. The initial flagship one was Silver Sand, a pure silver deposit, which has gone through a most recent resource update and announced a PEA in January with some very attractive numbers. You can see there a post-tax NPV of $726 million and a 39% IRR. So while the company is moving ahead with further studies and permitting to look to commence construction, following up is 2 other earlier stage but equally exciting exploration projects, Carangas and Silver Strike. And with Carangas, after an aggressive drill campaign last year of 50,000 meters, and another 15,000 planned for this Q1, target initial resource estimate of this project by mid-year. So I'd like to wrap up just kind of reviewing some of the catalysts. So I spoke to increased production. We're planning for our next fiscal year, 2024. We'll continue drilling, and that's to add again to our resource and reserve base, and as well make new discoveries at our existing mines. We've got these optimization programs at both of our mines, Ying and GC, to bring them forward and improve their economics further. The satellite deposit at Quanping, we're hoping to bring that to construction status later this year with an updated mining plan and cost estimates that we can share with the market. I talked about the mill program that we're going to be expanding the capacity at Ying. And at the very first slide, I touched on BYP. optimistic that we'll see a mining permit on BYP later this year, and then we'll see what we do. Do we build it or do we sell it? New Pacific has a number of catalysts, which you'll hear about in the upcoming presentation. And then going back again to our very first slide with that green box on the cash, we are in the midst of an ongoing and very aggressive review program of projects around the world. Generally sign about 30 confidentiality agreements a year, so looking at things in a very detailed fashion, about 2.5 projects a month. And so hopefully we'll have something that we can announce. Thank you very much.
Great, thank you.